Yeah, I know. Yeah. I know I missed the meetings and all that fun and games that we need to do with the revamp of the website. I know, bro. But yes, I'm really trying to find an excuse. Well, I'm not really meant to be saying that, but yeah, after the live, I'm gonna go to bed and then we can.
You're going to call me first. We're going to discuss the changes on the website,
Okay.
and then you can go to bed.
Yeah, we can do that. We can do that. You might need to put it in my calendar, but I also need to confirm it. So I'll confirm the meeting tomorrow.
Yes, the meeting with the dev will be tomorrow, but we need to discuss what we have to do. Are you live right now?
Yeah. Yeah, sorry. I just thought. Well, no, listen. We're talking about a revamp of the website. I thought let people know about it. Or am I shooting my load too quick again?
No, I mean, changes are being made, right?
Okay, change. Okay, well, they can know that changes are being made, ladies and gentlemen.
So call me after the live.
Just make sure you put it in my calendar so that I can confirm it for tomorrow morning.
I will.
You're not really getting that, are you, brother? In a bit. Ladies and gentlemen, what's going on, man? Yeah, so we're revamping things. We're changing things about. But what's been happening in the market, man? Bitcoin comes down to come back up. That's what happens. Not really had any crazy news coming out, but JP Morgan said buy. Why would JP Morgan talk about buying right now? Well, we are going into a very big earnings call season, and this is going to be, as they put, the meat and potatoes of whether or not investors or companies, should I say, are really towering through the madness that's about to unfold. You see, not much has been said about tariffs. One thing that has come out is the fact that the Fed or the Treasury is borrowing another $554 billion. Woohoo! More money. Whatever he's trying to do with the tariffs, he's having to give back straight away because they're borrowing more. That's not appealing now, is it? But why would JP Morgan be talking about buying? Well, it's going to be for a short period of time, but we're going to talk about that right now. We're going to break down what's going on in the market. We're also going to break down what's going on with Bitcoin. We're going to understand why there's a lot of accumulation in cryptocurrency. Supply shock is what they're saying. Supply shock is hitting the exchanges. That only means what? Bitcoin to the moon. All right. So don't sell, hold on to it. The only thing you need to sell is XRP, even if it does have an XRP ETF, will probably go to $2.40 and come straight back to $2.10. That thing, even when the SEC said, all right, we'll call it quits, XRP did nothing. So what do you expect from an ETF? Absolutely nothing. And you got to understand, with ETFs, they are deemed as money markets. So if you really want to diversify your portfolio and park cash in a safe investment, XRP ETF will be the one for you. I think it has set the precedence that it just goes nowhere, but it's a place of value. Now, come on. Would you agree that XRP is a store of value? Come on. I really want to know if you think that's the case, because I think it is. There's store of value and then there's taking the mick. They're literally, it's just flatline, ECG. Nothing. Let's get with the program, ladies and gentlemen. Here we go. So, stocks are rising. Yep, they're doing a nice little pump to the upside, but that's only because of what's going on this week. So, on Wednesday, Tuesday, we don't really have that many heavyweights other than Visa and Coca-Cola declaring their earnings. But in this rally that we've got to the market, with the market to the upside, it's all about the tech market. So, on Wednesday, we have Microsoft Corp, Meta, and QCOM coming out with their earnings. Then we go into Thursday, the 1st of May. We've got Apple, Amazon, Eli, MasterCard, McDonald's, All these heavyweight companies that we're fully aware of. Fartcoin is not a store of value. Then we got Berkshire Hathaway, and then, of course, we got a couple of energy companies coming out with their earnings, and then that's pretty much it. So, in other words, ladies and gentlemen, the week is filled with data for the big tech. Now, we've already had some news announcements. Google did really well on its earnings announcements. Just quickly go over to Google itself and have a look over there. Where are we at with Google? Here we go. So Google it's done the big gap up that it did on Friday, such, and then it's just now retraced all the way back down to close off that gap. So investors quickly took advantage of the fact that it had inflated in price, and it's just now retraced back down again. Going into Nvidia's doing very well, to say the least, that it's now come back up to recover the gap. It has got a little bit of a gap down here. That is a bit of a problem for me, which means that if Nvidia is going to be coming down, then it's more than likely that the stock market is going to be rolling over too. Harry Potter, mad love and respect for that, my friend. Thank you so much for that. But this is what I want to draw your attention to, guys. So first things first, JP Morgan is saying that you really want to, it's in the article that it put out to its investors, it started to dive into the idea that you really want to be buying stock right now, because there is an expectation that if Google's doing all right, then the rest of the gang's going to be okay as well, because they pretty much all sell round about the same thing, okay, with the exception of Nvidia. But JP Morgan saying that, and then, of course, warning of more pain to come. What is that more pain to come? Well, the pain is the tariffs. We don't know where we are with the tariffs. So let's just understand something. We've just recently had the Fed, or the Treasury, borrow $550 billion. Why? Well, the only logical reason I have for that is this. 2-year yield, 3.68%, okay? 10-year yield, 4.2%, okay? Then you've got the 30-year yield at 4.6%. What's the one thing you are noticing about each of these yields? So here's the 2-year, here's the 10-year, and here's the 30-year. There's something that we've got to take into consideration, right? Spreads. If there is a spread between the yields, and when I say a spread between the yields, we need to have a tight spread between the yields. We don't want a wide spread between the yields. Look, if the 2-year yield is at 3.6%, and then you've got the 10-year yield at 4.2%, that is a huge, huge spread. And when there is a spread, it can imply that there is liquidity issues. Now, when we say liquidity issues, it means that the marketplace is seeking liquidity. Now, remember, you've got central banks and you've got all the main banks as well, big boys, right, that supply liquidity to these exchanges, to wherever it is that they're providing liquidity for. Then you've got non-banks who would be deemed as hedge fund managers, brokers, dealers, market makers. They're not obliged to supply liquidity all the time. Banks are, because that's what they do. They start off in the morning and they set the tone, and then they borrow X amount. You know, remember the LIBOR, the London Interbank Offer Rate? So they set the spreads in the morning. They put out the money. What's the rate today? What's the reverse repo? Where are we at with everything? Okay, let's just borrow some money and let's put it into the marketplace. Happy days. So the banks are obliged to do that just to make sure there's liquidity across the board. But non-banks don't have to do that. That means that if hedge fund managers and non-banks, dealers, market makers are like, nah, I'm not interested, I don't want to take on that risk, that can create a little bit of a problem in terms of spread. So that would probably then justify why the Treasury is borrowing more money. But then again, in Trump's last meeting with the gang, his administration, Bessent turned around and says, well, we've increased the debt ceiling, so we don't have to worry about that for another 2 years. Moving on, where we at with, that's how quick it was. If you go back and watch that, he said that we've increased the debt ceiling, so we don't have to worry about that for another 2 years. Slowly but surely, all the money that we're going to be getting from this tariff, in principle, is just being reborrowed again. And you know, when you look at Trump, you can kind of see that he's starting to wear him down with this story of tariffs. You got Walmart coming up to him. You got all the main superstores saying, listen, we're going to be out of food if you carry on with these tariffs. Don't do it. So who runs the US? Corporate America or the president? That is open to debate, and I'm sure you guys are all going to have a word or two to say about that. But one thing I am looking at is to try and justify why JP Morgan is suggesting to start turning bullish on US stocks. First things first, well, let's just go over and have a look at where we are in terms of the dollar dominance. So I go over to the dollar dominance, you can see it's actually taken a nosedive. It's come back down, and Euro today out of nowhere has said, nope, we're going up. And Euro's moved up. Naturally, I'm expecting Euro to come up because Euro, and in terms of the rate monitor, we can see that you're going to be picking up quite a bit of change or a better yield on the Euro, given that it's now at 4.49% over the next 21 days. You're earning more, near enough, on the 10-year yield on the US debt market. That is wild. Just to convert it into a currency, you are earning 4.49% on the implied rate differential, okay? To be fair, it's 4%. Okay, after fees and what have you. All right. Well, no, actually, yeah, about 4.2, 4.3% after fees. Okay, so that's what you're getting if you exchange dollars into euros. Going over into it, you can see euros come up, and the dollar dominance itself is now taking a bit of a smack to the downside. I'm waiting for dollar to come and eat 96, and that's where my head's at. So what we're witnessing here is JP Morgan is telling people to invest in US stocks, meaning that we could end up seeing dollar making sharp reversals, all depending on whether or not these boys right here on Wednesday, Thursday, and Friday do decide, well, actually Wednesday and Thursday, that they do actually declare good returns on their earnings, okay? So this is what you got to look out for when you come to an earnings of a stock. First things first, I'm going to talk about the staple, the stellar, the performer, the top dog, the one and only, not Bitcoin, Nvidia. Sorry, I must have cheesed off a couple of people, but never mind. Well, we're talking about fundamentals here. And don't give me that Bitcoin is the future and what have you. That's not fundamental for me. That's a perception, okay? Here are fundamentals. Right now, you've got quarter end, 30th of April, 2024, Nvidia, plus 455% earnings and 262 on sales. Next one, 152% on earnings, 122% on sales. Next one, 103% on earnings, 94% on sales. And then the recent one at 71% earnings and 78% on sales. Now, logic says that you are seeing a deceleration in the actual quarterly earnings, all right? But nonetheless, it's still good. Why? Because their earnings per share is still going up, or the range. Well, price earnings has actually dropped down from this one over here, okay? And it has dropped over here. But that's only because it's factoring in changes in the environment. Certain investors are collecting profits and what have you, especially now that Nvidia had that stock split from the start of the year as such. But nonetheless, this is a stellar company, okay? If they do come out with their earnings, which is due in 30 days' time, and it does outperform, happy days. Let's just quickly go and have a look at Apple. We go and have a look at Apple's earnings. We then say to ourselves, okay, then where are they at? So we look at their earnings and you can see it's in and around a nice range. 11% on earnings and sales at the 30th of June 2024. And then 30th September 2024, you got 12% and 6% on earnings and sales. And then, of course, end of December 31st, 2024, you've got 10% and 4% on sales. Now, you can see that their sales are like reducing. And of course, their earnings they're not too bad, okay? But when you're earning nearly $7.95 per share, that is really good for Apple. So yeah, that is another stellar company to take into consideration, especially when they've got their earnings due out in 3 days' time. All of this behavior here could be consistent with Apple getting ready to just blow everyone out of the park with their earnings. That's a reason why JP Morgan is suggesting that you start buying US stock. Why? Because it's the Magnificent Seven that's going to lead the rally to the upside. Yes, 7 stocks are going to effectively bring the flavor to the upside. Now, if we do actually consider all the stocks that are going to be declaring their earnings, it comes to a sum of around $20 trillion worth of market cap exposure. In other words, there's $20 trillion worth of stock that is going to be decided as to whether or not it's going to increase in value or decrease in value. And that's what JP Morgan's trying to come with and say, okay, yeah, we're going to get ready for a nice little rally, but the tariffs are going to be a problem. Now, remember, all tech stocks are subject to changes in interest rates. So if interest rates are still high, yeah, we've got a little bit of a problem. And the way things are, if we didn't have the tariffs, the only thing that we would be contending with is the idea of inflation. And it's doing all right, given it went down to 2.4%, but the market didn't even react to that information because they didn't care. Why? Because tariffs are still a problem, okay? going into the NASDAQ, you can see right now, it has done a nice little rally to the upside, and price is effectively closed as close as it can towards the highs of the range, and volume is above average, and it is negative, but it's moved away from its lows. So you can see there's no real consistency in the way the market is behaving. This is good news, to say the least, that we've had high volume today, and they sold off to only come straight back up. So investors are starting to really just try and pick up stocks on a discount, but that's because if there's an expectation that there's going to be good earnings call going into the next 3 days, then investors are going to be loading up now and selling later on. With that being said, are investors selling or buying? Smart money, dumb money is suggesting that smart money could get ready to start selling stock. That means it's going to go up. Do you know how close we are to the all-time high on NASDAQ? Look at this. We are not too far away from the all-time high. We are not that far away. And especially with NASDAQ's volatility, this thing can easily go back to its all-time high. All-time high, high interest rates, inflation sticky, tariffs coming into play. We've got another pending war. That's going to be crazy. What's Trump going to say about that? That's going to be an interesting one. Most definitely. Most definitely going to be an interesting one. How that's going to play out, I don't know. But investors are not really too concerned about it. It's all about who gets involved. If the US gets involved with this story, tariffs ain't going to be a problem. And you've got China. It's just absolutely crazy. I mean, JP Morgan, buy. But on good news for Bitcoin, there's a supply shock. Yeah. Bitcoin exchange supply reaches 7-year lows. Traders hunker down, saying that decline on exchange balances is increasing fund flows, points to a renewed phase of accumulation. So, Arkham. Where is Arkham at? What's this? Black Swan, I was told. Okay. Well, we've got a little bit of interesting behavior on the ETF. We've seen BlackRock buying. We've got some activity. BlackRock's buying again. 300, 300, 300, 300. Happy days. Not bad. I'm cool with that. That's okay. Not too concerning. That should take it to around, it's roughly around nearly, I think at the start of the year, around $3 billion going into the Bitcoin ETF. And only in the last month or so, it's just shy of 1.1 billion, I think, if knowledge serves me correctly. Let's have a look at if the miners are selling on this behavior. And we'll get into a little bit of Bitcoin price action to break it all down for you. Here we go. I'm bullish on Tesla. Yeah, okay. Everyone's bullish on Tesla. Tesla investors just, the only asset that I know that investors on the street, it's just a funny asset. Here we go. Miners ain't selling, so that's good news. Miners are barely selling. So that's okay. All right. We had a couple of days where they were selling, okay, but they're doing all right. Bitcoin's price trajectory looks kind of nice. If we just go over to Bitcoin's price action right now, it's had a very, very choppy day. Absolutely horrible day, to say the least. It's just stayed in its Asian session range. It's not gone anywhere, which is pretty frustrating. And it looks like it's going to probably do the same thing as it did last week, where it stays inside of its psychological ranges, which is this stuff right here. That is horrible. If we get another week like that, ladies and gentlemen, then that would be then consistent with accumulation. With that being said, going over into the daily time frame, just to put it into perspective. Okay, so we've got wicks to the upside, but it's not really following through. But again, with the data that's coming out this week, and we're going into tomorrow's job openings and consumer confidence at 3 p.m. UK time, 10 a.m. Eastern Standard, that could more than likely bring some volatility over to Bitcoin. Quickly having a look at the order flow. We've got some liquidity coming into play up here. We've got a nice order of 40 million at 95,388. I was looking at Bitcoin today to go to 96. And the reason for that is because there was another $40 million order up there, nearly just under 1,000 Bitcoin orders, okay? And another one at 35 million just above that, 95,000, 96,000 region. So maybe they've bidded it lower. I mean, the bids have come in today quite clearly. I mean, we've got an order here, 19 million picked up at 94. Initial order was 1,000,002. And then we've got 2.21 million right there. We've got this little order right here for 28 million at the lows, which in principle is the vector candle recovery at the Brinks box. So if you just go over to it, this is what you look for by the principle of the hybrid system. This is the Brinks box. And one of the concepts of the hybrid system is to always trade back into the Brinks box recovery. So if there is a vector candle right there that hasn't been fully recovered, you can anticipate that they're going to try and go back into that point. Sometimes they go for it straight away, where Bitcoin did it today. It swept the liquidity and then made the reversal back up. And then it consolidated, come back into these vector candle regions right here, tap those zones, and then made a recovery back up, but didn't quite make the rest of the vector candle zone up here. Now, other than Trump talking about the tariffs, I've not seen any news coming out about the tariffs. I mean, it does say here, U.S. insurers face higher loss costs and market risks from the trade war. So we know that insurance companies are going to be experiencing a little bit of a drawdown. Maybe you want to start shorting insurance companies. But what you've got to understand with the stock market is there's always going to be a rotation. So depending on what sector's doing well, primarily the tech market is where the earnings are coming out, and the financial sector as well. You got Visa, you got MasterCard that are going to be declaring their earnings. If people have been busy spending money, then their transactional fees are going to be coming in as one of the main sources of revenue. So if Visa or MasterCard come around and say, yeah, we're seeing a lot of activity from consumers and that they are actually spending money because we're offering more credit facilities, we're getting more revenue on transactions, tells us that people are actually putting money to work. Happy days for the earnings for Visa and for MasterCard. You might want to start going buying some financial stocks, okay? Or if it's all good for the tech market, then of course, Apple, Meta, Amazon, if they start coming out with some good earnings and everyone's consuming AI and all the cloud services, naturally that's going to be a benefit for those guys. You might want to start buying those stocks. With that being said, naturally that's going to end up leading Bitcoin to go up because it's one of those where it is joined to the stock market. But if JP Morgan's saying that things are going to be looking difficult with the tariffs, the only things you need to take into consideration is how Bitcoin is going to behave surrounding the interest rates. You've got the Bank of Japan that want to increase their interest rates, but they're not going to do it yet. So you've got yourself a little window. Maybe by the time the quarter is done with its earnings, that's when I would expect assets to really start to depreciate. And that's when we'll probably know where we stand with regards to the tariffs and maybe inflation, with the potential rate cut in June by dearly beloved Federal Reserve. So it's one of those ones, guys, where we can just sit and speculate on what Bitcoin's going to do. From a technical perspective, you can just go to the chart and say to yourself, okay, daily time frame, where are we at? What are we seeing? We're just seeing a lot of chop. There is no conviction right now. Everyone is getting liquidated up and down. There's literally nothing technical other than the fact that it is in an upwards move. And you've also got the 5 and 13 EMA. Price hasn't broken beyond the 5 EMA. Neither has it broken the 13 EMA. And naturally, the next daily candle will then bring the 13 EMA a little bit further upwards. So if we don't see price invalidating these two moving averages, then we are of the assumption that the run is still valid to the upside to proclaim what could be another attempt at the 100K mark. Woo! Bitcoin to the moon. It's 6K away. It's nothing great. Any questions, ladies and gentlemen? ETH has a big update coming early May. Yeah, there's that as well. On the weekly time frame, Ethereum is looking like a nice bottom. Ethereum is looking like a nice bottom. Looks like it's a nice bottom. I mean, God forbid we see this liquidity. How many of you buy Ethereum at $800, just under 1,000? That would be a snap, honestly. But the only reason it would go down to $800, right, $885, is just purely because of anything that's going on in the marketplace. Any crazy behavior, okay, such as tariffs, and China's like, no, we're not interested, and then it just slumps, and everything slumps. Oh, we're going to put a ban on crypto. Chinese people aren't allowed to use crypto for anyone in the US or something stupid like that. Not that they could, but anyways. Tino, you mentioned C or seed coin replacing XRP. What was that? So a gentleman came out with the idea that the actual coin of XRP, the coin that we would buy from exchanges, is not the actual coin that banks would be exchanging and doing the transfer of liquidity with. They do it with the seed coin, and the seed coin itself. Go and dive into it. This gentleman put out a post saying that it's the seed coin that's going to be going to your big boy money, like $500 XRP and what have you, not the actual coin that we've got here. So maybe it would see the benefit of it, maybe, but he was talking about the banks and institutions are going to be using a seed coin of XRP. So if anyone can shed light on that and dive into, I heard the guy say, he was like, your XRP on your exchange, on Binance and what have you, you're not going to get that to those crazy numbers. It's only going to be the seed coin. So that's what he was talking about. Tell us the logic. Tell us the logic of both. What, sharp reversal or sharp rise? What do you mean? Any questions, guys? Tino is the type of guy who licks his finger before turning the page on his iPad. What a guy. Really? Is that what you think? Anyways. Anything else, guys? Tino, could you look at ZBCN, please, bro? Partnership with MasterCard, Circle, and more. Is that a stock? Is that... Oh, is it stock? Cryptocurrency? Is it? Oh, here we go. What's this? Oh, okay. Not been around for too long. What's this? Let's have a look. Okay, starting to move away from these lows. Very, very cheap. Nice little liquidity run. Probably come back down. Yeah, probably will come back down for accumulation. And it's got the history of doing so. So whatever news announcements comes out for this asset, you can see historically with an altcoin, it pumps, it dumps, pumps, dumps, pumps, dumps. And that's, of course, either accumulation or just getting into the process, adoptiveness, people becoming familiar with it. You know, you can imagine Bitcoin was exactly the same thing back in the day. You know? Any other questions, guys? Any other questions other than that? How many of you are new to this live stream? If you are new to the live, of course, get to tradersreality.com. Got a free PDF to give you on how to get started with the hybrid system. That's going to pretty much help you understand why I say it's more than likely going to recover back down to the vectors and what have you. And also, if you ain't trading or you're going to trade the news announcements for the stocks that are declaring their earnings, with BTCC, you can trade tokenized stocks and commodities. So you can really build positions across these asset classes. So if Amazon do well, NASDAQ's going to go up, S&P is going to go up, trade NASDAQ, trade S&P. Okay, cool. Amazon, you can trade those. You can trade Tesla. You can trade, there's Amazon right there, and Google. You can use this platform and trade that stock. But what's more important? You can buy gold on this. Now, if gold right now is correcting and you get into a position on gold and leave it, okay, you're effectively getting ready for the next hedge. What's the next hedge? Well, you've got yourself another little war, haven't you? So investors are effectively going to be getting themselves positioned for that flavor. So, and you can trade Forex where you can exploit the benefit of euro going up. Of course, there's your rates right there. So that's naturally going to keep on climbing, which effectively means that if you're stuck in a trade on Bitcoin and it's not going anywhere, there are other asset classes that will move so much better than Bitcoin. Okay. And you can exploit that. I mean, you just look at gold in relation to Bitcoin. You can see it's done absolutely wonderful. And that's on 4-hour time frame. And then you go to Bitcoin and it's not really done the same thing at all. It's given us this little move up here, but nothing substantial. Okay. Even though it's a shame, it should be at its all-time highs and more, but nonetheless, give yourself the opportunity to hedge across various assets. And you can do that with BTCC. So go check that out in the description. It's available for you. Don't need VPN or KYC if you're from the States and you want to trade there. Tino, I'm new here. Is there some rainbow wasp here? You're talking about old lives. Gold runs usually precede Bitcoin runs. Just wait. Probably, yeah. Probably. But the thing is, when you say gold runs and then Bitcoin follows, remember when gold was being traded, Bitcoin never existed. Okay. So it's when gold runs, Bitcoin follows. Naturally, you expect that. Okay. But I think with Bitcoin, it's all about they'll accumulate first. And even though gold's going up, gold's only going up because the street is not turning to crypto. Bitcoin's not being seen as the legacy yet. It's not part of the legacy marketplace. No worries, man. Thank you for that, bro. Yeah, the legacy market, it's not part of that. I hope I've answered your question. Is that just me talking now? Have I answered that question? Yeah, cool. Anyways, other than that, ladies and gentlemen, what's wrong with the like button? I leave that to you guys to investigate. Apparently, there's a tariff on the like button. So go check it out. Mad love and respect, guys. And I'll be tuning into you all tomorrow. Take care, yourselves, gang. Stop flipping winking, man. This guy is so dead.